Hello everyone, welcome to Elliott Wave YouTube channel. My name is Henry. Today is Thursday, February 13, and the time is around 3:45 a.m. GMT. So here we are looking at the chart of the Bank of America. This is a 30 minutes chart, and we can see right here we have a rally in the stock, and the rally is looking impulsive. We have one here with two, and then now we have ended with three here. Nicely subdivides into another five waves here. Okay, so currently doing what looks to be a zigzag. There is pullback, and we could see a little bit more downside to reach equality here, where the C will be equal to the A. Okay, and so this blue box then is going to be in the support area in the shorter cycle. So this is only a short-term view. Okay, and this area can produce support, and from here the stock can go to new high again, or at least bounce in three waves at least from here. And now what can be the alternate? Well, the alternate, it could be that this is instead of with A, this could be with 1, and this could be with 2, right? If this is 1 2, then of course this with 3 could be extended and even break below 1.618, because by definition with 3 in the Elliott Wave principle is the strongest and the longest. So if this is 1 2, then the 3 can potentially go to 1.618, and then we can do 4 and 5. So it can do a 5 ways down as an alternate. All right. Now let's take a look a little bit at the larger degree, but still within the short-term view. I'm looking at the 4-hour chart now. This is a partial label here. Okay, the full label can always be seen inside the member area, where you can get weekly, daily, 4-hour, and 1-hour. We have 14 days free trial, so I'll put the link in the description in case you are interested. So here in the 4-hour, here we can see I'm putting down the same labels we see here before: 1 2 in black, 3 4 in black here. Okay, you can see it here: 1 2 in black, and then it's 3 4 in black, and this is the subdivision of the 3, which is nicely 1 2 3 4 5, that we can see clearly in the 1-hour, in the 30 minutes chart here. Okay, so you got a 1 2 3 4 with 5 wave subdivision here. If you measure it from January 27, right? So so what do we see here if we take a look at it from the 4-hour? Now what we do see is the following: since it tops out, or not tops out, I mean just temporary setback, January 15 here in Bank of America. Now since we sort of form an intermediate cycle high here, all right, we got a pullback, and the pullback is in the form of a WXY. It is a 3 swing. Okay, it is a 3 swing. It is not an impulse, and we only got this 1 2 3 ended in the 100% extension area. From here the stock starts to consolidate, and then since then rally again, right? So this is what we call the extreme area here, because it is really measured from the actual peak of whatever cycle that we are in. So if anybody, let's say in the members that we have bought it here in the blue box, then they should have been already been able to move their stop loss because of the rally here, right? And they can just move the stop loss to their entry level, and then already their position should be risk free by now. Now you can see after this there is pullback, which is corrective. We got a rally, and the rally so far looks impulsive so far. So we got I think this subdivision looks quite reasonable. We got 1 2, and then now looking to end with 3, the 3 ends here, and then now we do a 4 and a 5. Now what can be the alternate here? Well, the alternate could be that we are ending the 5 waves here, right? I think that will be the alternate. We are ending the entire 5 waves already. Now if we are ending the entire 5 waves, then the pullback is not just going to be a wave 4 pullback, but it's going to be a pullback that corrects the entire rally from January 27, right? So if this is going to be ending the cycle, then we're going to be doing something like this before higher again, possibly. Now technically Bank of America needs to break above this peak to sort of confirm that we're going to extend higher again, technically, right? Now, but however, the previous trend has been bullish, the pullback has been corrective, and then since then the rally looks impulsive. So that's why we need to go with the trend in that kind of scenario. So instead of anticipating, okay, maybe we can do what we call a double correction like this, even though technically this is possible, it's all about how probable it is compared to any other alternative, right? So we got a previously bullish trend, corrective structure, a rally that looks impulsive. So you go with the trend and you do not anticipate something like this. So this is less probable than the other way around, that we're going to be extending higher. So then we have two sort of possibilities then, in my opinion, which is what we are calling here, that we are 1, 2, and then we are ending 3, and then now in the 4 before one more push higher to finish 5 ways up from January 27. Or second possibility is that we could have ended the cycle already, and then if that's the case, we do a bigger pullback. But still, even if that is the case, most likely we're still going to hold above here for more upside later on. Alright, now if we are going to be doing this bigger pullback, then there is a possibility this pullback here in the shorter cycle can become, like a 1, 2, 3, 4, 5, if that's the case, because then we will see a bigger pullback to correct the entire rally from January 27 here. Okay, but until then, we take the most aggressive view, which is quite reasonable, I think, based on the structure that we are only ending with 3 here. So we should be looking for one more push higher before we end the entire 5 ways up. So if that's the case, then this is the next potential support area for Bank of America, and then from here it can go to new high. Alright, so I hope that you enjoyed this video. Please do like and subscribe, and I'll see you all again tomorrow. Have a nice day, everyone.